All right, let's talk some Fubo.
What do you kind of think are the implications here?
Well, I think we're starting the year, and it's like Julia just says, sports, sports, sports. So I think that everything about streaming just seems to keep going towards sports. So that's a good thing, ESPN, as she mentioned, and so forth. But I think also, like, Disney kind of gets a free play here. So they want an independent sports network. Now they essentially have one. They don't have to build it. They just have to invest in it. They own 70% of it. So in some ways, that makes a lot of sense. Fubo, on the other hand, gets to leverage the Hulu brand, which I think they need because it'll make the content they have more attractive to advertisers. And I do think this will increase their advertising revenue. So all the investors are investing more in Fubo right now, literally right now. I think that's probably warranted.
And this seems, Barton, like it also clears the way for Disney to go ahead with the launch of Venue, right?
Yes, it clears the path for all these different threads that Disney has. Sports is interesting, right? They're pursuing so many different ways to distribute rights. So they've got ESPN Plus today. They've got ESPN on their traditional pay TV ecosystem. And then they're rolling out the ESPN flagship streaming. And now they're also owning the majority, 70% of Fubo, Hulu, let's call it Hubo joint venture that will be sports focused kind of linear service. So they've got every way under the sun to get sports in front of you. And this clears up a lot of the noise and a lot of, the impediments and the blockage that have come from the litigation. They're free to run, and they've got a lot of ways to go at it. So they can have at it now.
So, I mean, Mark, a lot of consumers are just kind of their heads are spinning from the options out there right now. How do you expect this to all shake out?
I think is very. I mean, even understanding the deal is confusing. So I think all these options that consumers do have is confusing. I think ultimately it's what are they interested in? What speaks to them? Do they want to watch football? Do they want to watch college? Whatever it is. And so it's ultimately going to shake out in terms of that. Do you have content that's really compelling to me? I kind of always go back to Netflix. One thing that Netflix is really good at is to basically onboarding you at the beginning of the night and then presenting something to you that you might not have watched. And they're going to do that literally tonight with WWE. So I think Disney still has to figure that out. How do they just onboard consumers and then send them to the right sports content that is compelling to them and they're going to want to watch and pay for or get ads?
No, that's very well said, especially, Barton, when the streaming services, now I'm going to say Hubo every time, Hulu Plus and Fubo combined only have 6 million subscribers.
Only?
Correct. They're one of the options out there. They'll be one of two growth stories in the
That's a ton. Like, people don't realize, they try to compare those against, like, Netflix or other streaming services that, offer plans that are like $10, $15 a month. You got to understand, like, when we're talking about those TV packages, you got to comp those against, like, satellite, cable type packages, right? Because, like, I pay like $100 a month for Fubo, $100 a month. So, like, my value to Fubo is like, at least we can call it 7x or 10x what a value of a Netflix customer would be, right? So that's something I think that's very important in regards to the subject. People are like, it's only a 6 million. I'm like, 6 million people paying $80 or $100 a month? That's a pretty big number there, isn't it? So, Disney Plus is, how much is Disney Plus? Like $8 or something like that? Like, it's just like, I don't think those are the best things to comp against Fubo.
Kind of linear bundle along with YouTube, the bigger kind of traditional pay TV services, are not really growing at this point. They're declining for the most part. And, I think that what we're seeing right here is that this world that we grew up with of turning on TV and getting all the sports on TV is falling apart. The future is going to be the sports you want are going to be tucked away in myriad places, and you're going to have to navigate that. And what's surprising...
And it's very annoying, by the way. It's very annoying for anybody that's a sports fan. You know what I'm talking about. There's a lot of memes out there about this. Like, it's frustrating, right? Like, the unbundling was probably one of the worst things to happen to sports fans, because now it's like, you want to watch this game? Oh, I got to watch it over on Netflix. Oh, I got to watch it on Amazon. Oh, I got to watch it on Fubo. Oh, I got to watch it on this. Oh, and then there'll be random games that, like, let's say ESPN, like, will tuck away, like, certain college football games to, like, ESPN Plus or whatever it is, which is a whole other service I can't even get through Fubo. Like, I would love it if I could just watch every single game just through Fubo. I would even pay more money for Fubo. Like, I'll pay $120 a month, $150. I don't care. I just don't want to have to worry about like, oh wait, this game's on Max. Like, literally, you want to watch a certain basketball game, you're gonna have to watch it on Max. Certain football games now are on Netflix. Certain football games now are on Amazon, right? Certain football games are on ESPN or this. It's like, holy smokes.
Consumers, the younger set, seems to want that. They seem to want to watch Thursday Night Football on Amazon. They want to watch Christmas football on Netflix, and they'll probably.
We don't want that. No. No one wants that. No, let me be very crystal clear. No one, not one sports fan wants to say, oh yeah, let me go try to hunt down this game I want to watch. No one wants that. We would all just love it if there's just one place and we could just click on it and it's like, oh, there's the game. Like the old days, right? When you had satellite, when you had cable. I mean, shoot, maybe we didn't know how good we had it back then, right? Everybody complained about the bundle back then. Oh, satellite cable. We didn't know how good we had it, really. Now you sign up for all these different services, and now you're paying way more money than you would have just paid for satellite or cable back in the day. That's the worst part, for the same stuff.
Carried on Fubo here. So the world's changing, and it's going to be more complicated, and that's just the way it is.
Barton, I love how you're like, I guess they enjoy this. I guess they enjoy this treasure. We always said they enjoy the TJ Maxx treasure hunt. This is like the content treasure hunt, Julia.
But I would say what's interesting is there has been this content treasure hunt, but this is consolidation. This is going to make it easier to find all that sports content in one place. And you could bet once ESPN flagship launches, they're going to make it easy to aggregate all that sports content for real sports fans. So I think as we start the year, this really marks a trend that we're looking for more of, which is a rebundling. I'm not going to just say a consolidation.
And who called out the rebundling? David Gandler. He said many years ago, we're moving to this world of unbundling. And then he said, we're going to move back to a world of bundling. And that's exactly, like, I'm 100% convinced that's what we're going to end up likely seeing over this next 5-10 years. Like, everybody's unbundled. Everybody's realized this sucks as an experience. This is annoying. This is frustrating. And what I think is ultimately going to end up happening, I think David Gandler is right on, and he's seeing the future here. 5-10 years from now, we'll see everybody kind of be bundled together, and you'll be able to access everything in likely one hub again. Like, I think there's a very high probability of that because the consumer is getting frustrated.
I think that there are challenges, obviously, when it comes to merging big media companies, that we could certainly see some of that. But a rebundling where we see more of these services packaged together, so it's easier to find your content. So it's easier to subscribe to a bundle that's maybe smaller than the old cable bundle, certainly probably less expensive, but easier to navigate for sure.
100%. You know, and that man right there, he called this out, and that's the world we're going to probably move to, which is honestly probably better than all this crap where it's so annoying.
In the company, David, good to see you. So when you and
John, thank you for having me.
Great to have you back. When we last spoke back in August, you were suing Disney and its partners over venues, saying it was anti-competitive, deprived consumers of choice. Now under this deal, Disney is beefing up Fubo, becoming a majority owner in the company you'll be running. So how does this fix those issues?
Well, I think the combined company, first of all, will have about 6.2 million customers. And as you said, it will be the second largest virtual MVPD in the space. And for me, that's an important moment because it significantly intensifies the competition in the space. And we'll be able to, negotiate deals together, get better pricing, more packaging flexibility, and that ultimately helps consumers. And, as part of our deal, we've amended our carriage agreements, which allow us to launch skinnier bundles to attract customers that are more price sensitive and looking for greater value.
And what will the capital being injected into this venture do for you?
So, as you know, we've gone from being an upstart, should this deal go through, as part of the signing, we've had a cash injection of about $220 million and a term loan of $145 million. So that gives us significant capital to continue, to march towards our growth plan. And I think together, we'll be able to really focus on three areas. One is sort of the content cost, advertising optimization. There's marketing efficiencies. And we'll look to leverage, Disney's resources and support, to help us grow our business and compete vigorously in space.
David, it's Morgan. It's great to have you on the heels of this news. As we just mentioned, as John just mentioned, your stock finishing up 250%. It just surged. Investors are certainly wrapping their arms around this and seem to be very excited. But I am curious, if we take a step back, how did this deal actually come together?
Good question.
I get this question a lot. Look, as I've always said, our goal has always been to provide value for all of the stakeholders in our industry. And we've said that was for shareholders, for our media partners, and obviously for our customers. And, we initiated, I personally initiated, I thought it was a good idea. I think that, given where Hulu Live is and, what Disney was doing with it, I think it made a lot of sense. And, the key, I think, for the industry right now is to look for ways to continue to monetize programming. And I think this is, again, it's an important deal. It certainly changes the landscape. It's more competitive. And the big winner today, I think, is the consumer.
How does it speak to how quickly the media landscape is changing and evolving here right now, especially as you start to see things like, we're even experiencing it. Comcast, our mother, our parent company with SpinCo. You're seeing it with other deals happening among more traditional media companies as well. But even just tonight, you have Netflix broadcasting its first WWE Raw episode as well. So how does it speak to what we're seeing in terms of cord cutting, in terms of cord nevers, and in terms of this TV 2.0, I'll call it, landscape?
Yeah, look, I think you're right. It's a very complicated space. The dynamics are quickly changing. Everyone's looking to try and reposition themselves for success to be able to attract more customers. We've been very focused on
Oh, so that was a good slide there. I wonder how recent this is as of last reported company filings. Okay, so yeah, Spectrum, Xfinity, DirecTV. Think of all these as like going down, down, down. And if you look at the numbers of all these guys, like over the last few years, like they're all trending down, right? And they're going to likely, in my opinion, at least continue to trend down over this next 5-10 years. Like Spectrum, Xfinity, DirecTV, all these are going like that. This guy. And then Dish is with Sling. That's kind of a messy situation. I don't know, what's going to happen there. My guess is those probably trend down as well. So there's two that are going to be going up, in my opinion, in stealing these folks, and there's four that are going to be going down. So my opinion is these four are all going to be going down. This guy's going to be going up. This guy's going to be going up. YouTube TV long term probably gets to 15, maybe 20 million subs. Fubo with Hulu Plus Live probably gets to 10 to 15 million, something like that, right? And I'm really just thinking about like 5 years out, right? I'm not thinking about like 10, 20 years from now, because a lot can change in there. And maybe if this Fubo Hulu relationship goes really well with Disney, maybe they even become the big dog and overtake YouTube TV over time, right? Which wasn't something you could even consider when Fubo was alone. Because it was like, there's no way little Fubo is going to ever take over YouTube TV. But it's like, now with that Disney backing, it's like, you never know. The marketing synergies there could be substantial when you think about Disney Plus, the ecosystem there, the amount of channels. Disney obviously is going to want Fubo to win because they have 70% ownership of that company. So, when you think about all the broadcasting that ESPN does, all those games that get millions of viewers, my gosh, and Fubo, let's say, has very discounted rates at doing advertising on those games, let's say. There's a lot to be, pretty excited about there, and a lot of synergies. So as long as the deal goes through, it just opens up a crazy opportunity for Fubo over this next 5 to 10 years.
To try and reposition themselves for success to be able to attract more customers. We've been very focused on super aggregation. It's an area that I've talked about several times now over the last year. We want to be able to provide consumers with different price point video services along the demand curve. And we want to provide them that flexibility. And I think everyone, including Netflix, is looking for ways to ensure that they remain at the top. As it relates to Disney and our relationship, I think that, what we're able to do right now is to offer two very distinct brands One is Hulu, which will provide a more fulsome entertainment cable replacement service, which obviously has sports, news, and entertainment. And Fubo will continue to double down on its sports offering. And now with these amended carriage agreements, we'll also be able to afford consumers, skinnier sports bundles. So we're very excited about this. I think you'll continue to see significant competition, but what you learned today and what we were able to secure today, I think, is really important as it relates to consumer choice, affordability, and value.
Hey, I want to thank you so much for watching that clip. I hope you really enjoyed it. What I'm showing you in front of your face right now is 1000xstocks.com. This is such an important website and service to use if you want to research companies, if you want to understand companies on a high level, so you can hopefully get better results in the market. And we know as the years tick on, money compounds. It is so important you research companies, you compare companies, you're listening to conference calls, looking at SEC filings. All that's included into 1000xstocks.com. So to enjoy 1000xstocks.com and to apply for that service, you can go to the description area of this video, or you can go to 1000xstocks.com, whichever you prefer. Did you watch this video that I put out 2 months ago? There's a video I put out 2 months ago called 3 High Potential Stocks. And in this video, I talked about 3 stocks that I thought have the ability to change folks' lives, right? And that video was 2 months ago. Well, the 3 stocks I covered in that video, this is one of those 3 stocks. It's a company named Honest Company, HNST. At that particular time, that was a $3.40 stock. Now the stock is, we can call it a little less than a double up, but almost a double up from that price. It's now $6.63 a share. The second stock I covered in that video was a company named SoFi Technologies. SoFi Technologies was an $8.59 stock. And I said, it's a Thomas the Train that could. And did Thomas the Train really go? Because SoFi here today is over $15 a share. And the third stock I covered in that video was this company, Fubo TV. It was a $1.41 stock. And I said in that video, don't let this fool you. A lot of people were getting fooled by the 1-year performance. They were getting, frustrated with the stock. It wasn't going anywhere. And I was telling folks, everything's headed in the right direction with this company. All the numbers are headed in the right direction. Everything's headed in the right direction, right? That stock here today is now nearly $5 a share, up over 200% here today. In that video, I specifically talked about there's a high probability that there's going to be a settlement way before this goes to trial. I've been fortunate as my net worth has grown over the years. I've gotten to know some very, very, let's call it top 1% lawyers. I'm certainly no lawyer, but I know some very special, very talented lawyers, okay? And they taught me a lot over the years. And so I can analyze some of these situations and kind of realize what's likely probable in a legal outcome. And so in this particular situation, I looked at it and I said, I think there's going to be a major settlement based upon how favorable everything was going for Fubo. I thought there's a high probability that there's a settlement before this ever goes to trial, because the way I looked at it, and you can go watch the videos that I've talked about Fubo over the past few months, I told you guys specifically, like Disney, Fox, Warner Brothers, these guys aren't going to want to take this to trial. It's going to get ugly and it could be way more painful for them. And so I said there's probably likely a settlement coming out before that. The specifics of that, we'll see, right? And we'll go through what just happened, and it's game-changing for the stock. And speaking about game-changing, look at this. Options, you want to talk about options printing? You understand when a stock moves 200+% in terms of stock price in a day, you're going to see options, call options on that stock, move thousands and tens of thousands of percent the very next day. And that's exactly what we have seen here. 32,000% gain, 26,000% gain, 31,000%, 27,000%, 22,000%, 17,000% gain today, okay? 16,000%, 13,000%, 20,000%. Jan 31's here, 10,000%. 11,000%, 12,000% gains. This is incredible, right? I took it all the way out to May. Even May calls were just insane today. 2,200% up, 3,000% up, 3,000%. You got to understand when a stock moves several 100% in a day, the options are going to be thousands and tens of thousands of percent. And that's exactly what we've seen with Fubo. My private stock group today was insane. And the amount of people that made thousands, tens of thousands, or even hundreds of thousands of dollars today was ridiculous. I mean, absolutely ridiculous. A lot of folks, looked into Fubo and they liked it as a, kind of a speculative stock, and they built out some sort of position. And those folks were rewarded handsomely today. It was ridiculous. I mean, some of these gains were just insane. This is a $180,000 gain today. $180,000 gain today for this individual. Imagine making $180,000 in one day. Like, absolutely incredible, right? Jeez. It's insane. I mean, just insane. Like, it's great to see, that sort of situation play out there, right? Now, what happened with Fubo? Like, why did this stock go absolutely insane? Well, here's what happened, okay? Fubo and Disney's Hulu plus live TV virtual MVPD business to combine. Disney to combine its Hulu plus live TV business with Fubo and become a majority owner of the resulting company. The combined business will operate under the Fubo publicly traded ticker symbol Fubo, right? Led by the existing Fubo management team. Fubo and Hulu plus live TV will continue to be available to consumers as separate offerings. Shout out Shaheen, shout out you, man. With a combined 6.2 million North American subscribers between Fubo and Hulu plus live TV. The new virtual MVPD company is expected to enhance consumer choice through more flexible programming offerings. Fubo to create a new sports and broadcasting service featuring Disney's premier sports and broadcast networks. This is huge. This is what Fubo took them to court over and blocked the venue, right? And now Fubo is essentially, going to do this. Like, wow. All litigation between Fubo and Disney has been settled. I told you guys, man. David Gandler and the legal team at Fubo, like, they did a heck of a job, man. They did a heck of a job. Like, they played it well. And the Walt Disney Company today announced they have entered into a definitive agreement for Disney to combine its service with Fubo. The transaction will enhance consumer choice by making available a broad set of programming offerings and is subject to regulatory approvals. Fubo's shareholder approval and the satisfaction of other customary closing conditions. Now, keep in mind, obviously Trump takes office here in just a couple weeks from now, and so it's pretty probable that let's just call it the environment for doing these sorts of deals is going to get very much more friendly over the next year or two. So there's a pretty good probability that this will end up being able to go through. It's not guaranteed, but I'd say it's pretty good chance. Okay, under the terms of the definitive agreement at closing, Disney will own approximately 70% of Fubo. Fubo's existing management team, led by Fubo co-founder and CEO David Gandler, will operate the newly combined Fubo and Hulu plus live TV. We are thrilled to collaborate with Disney to create a consumer-first streaming company that combines the strengths of Fubo and Hulu plus live TV brands, said Gandler. This combination enables us to deliver our promise to provide consumers with greater choice and flexibility. Additionally, this agreement allows us to scale effectively, strengthens Fubo's balance sheet, and positions us for positive cash flow. It's a win-win for consumers, our shareholders, and the streaming industry. Yeah, we're going to go through the specifics of this deal. Oh my gosh, is it looking good for Fubo, okay? The combination will allow both Hulu plus live TV and Fubo to enhance and expand their virtual MVPD offerings and provide consumers with even more choice and flexibility, said the executive vice president and head of corporate development at Walt Disney Company. We have confidence in the Fubo management team and their ability to grow the business, delivering high-quality offerings that serve consumers or subscribers while the content they want with offering great value. Now, obviously, these products are allowed all over the place. If you don't know Disney, they own ESPN. ESPN owns ABC, ESPN, all the different ESPN networks. And at the end of the day, if you want to watch sports, it's very difficult to watch the type of sports you want to watch without going through ESPN-related products. Like, it's very, very simple when it comes to that, right? Now, following the closing of the transaction, Fubo will be governed by a board of directors with the majority appointed by Disney, as well as independent directors. So this is a give and take situation. David Gandler got a lot of his way. Like, David Gandler won this battle like 90%. But this is a one angle I'll say he didn't win. Maybe the 10% that Disney won here, right? Maybe one of the main key points that they wanted to win was Disney's going to control the board of directors, which means David Gandler could play himself long term here. How does David Gandler play himself? Well, if David Gandler does a bad job, Disney board of directors is going to likely throw him off and bring in a Disney person. Like, I'll put it to you as simple as that. So if the results aren't good enough over the next couple of years, if Fubo's stock price, let's say, next few years doesn't do very well, they're going to kick David Gandler out. I would say high probability of that. Now, if David Gandler tears it up and Fubo's doing great numbers, then there's really no reason for the board of directors to get rid of him, and he'll be fine. But if they go through any sort of tough time, it's going to be probably quick action to get Gandler out of there and bring in a Disney person, okay? Gandler will, and also sets it up for a situation that, it could set up a situation where Disney ends up buying out this whole entity long term, like they did with Hulu in the past, because back in the day, they made a big position in Hulu, and then they ended up buying the whole thing. This could happen with this a few years from now. Maybe not anytime in the short term, like in the next 1 to 2 years, but 3 years out, 5 years out, 7 years out. I wouldn't be surprised if at that point in time, maybe Disney just buys out the whole company. Maybe at the same time they kick Gandler out, right? So I'm just playing years out here, kind of a game of chess, okay? Gandler will also serve on the board of directors, continuing as Fubo's CEO. The transaction will provide the combined company with the resources in support of Disney, and existing Fubo management team will continue to focus on driving growth and profitability. The transaction will also enable Fubo shareholders to benefit from synergies of the combination. The combined business will realize synergies through more flexible programming packaging to cater to all audiences, greater innovation, and sales and marketing opportunities. The combined company is projected to be well capitalized and cash flow positive immediately after closing of the transaction. That is such a key sentence there. Such a key sentence. Cash flow positive immediately after the closing of the transaction. In conjunction with the transaction, Fubo has settled all litigation with Disney and ESPN related to Venue Sports, the previously announced sports streaming platform planned by ESPN, Fox, Warner Brothers. Fubo has settled all litigation. Look at this. Fubo has also settled all litigation with Fox and Warner Brothers. They settled. Oh, who could have thought a settlement was coming, I wonder. In connection therewith, at signing of the transaction, Disney, Fox, and Warner Brothers Discovery will make an aggregate cash payment to Fubo of $220 million. I try to tell people 1,000 times in regards to this Fubo situation, there was only upside for Fubo. There was no downside scenario in regards to Fubo doing what they did. I think people are seeing it now, right? $220 million cash payment. Oh my gosh. In addition, Disney has committed to provide a $145 million term loan to Fubo in 2026 as part of the transaction. Additionally, a termination fee of $130 million will be payable to Fubo under certain circumstances, including if the transaction fails to close due to the failure to obtain requisite regulatory approvals on the terms and conditions set forth by the definitive agreement. So if the deal somehow doesn't go through, right, which, I think if I had to put odds on, I would say like 85% chance deal goes through, 15% doesn't, okay? But let's say the 15% chance plays out, right? Well, Fubo is going to get a $130 million payout still, even if the deal didn't go through. That's not a small amount of money. Advisors, Wells Fargo was helping advise Fubo as well as Evercore in regards to that, right? Now, this really sets up Fubo to take on YouTube TV. I would say, with how many subscribers YouTube TV has, which, could be approaching 10 million, somewhere around there roughly, right? Paid subscribers. It's a situation where I always told you guys, Fubo has a chance to be the number 2, but they have no chance to be a number 1 in this marketplace. Well, now that they combine with Hulu plus live TV, there's a potential that they could overtake YouTube TV long term. There's certainly no guarantee, and it's going to be a heck of a challenge, but they actually have a decent chance of this. And this is something, like I said, in the past, you thought there's no way they have a chance to pull this off, right? Now, maybe they got a little bit of a chance here. So let's break this down, okay? Fubo's now going to be set up where they can likely hit 10 million plus paying subscribers likely in 2 to 3 years from now, right? If you kind of look at where their numbers are at right now, they're going to likely launch a new service probably in the next year that's, I would say, probably going to be a very hit service that'll probably be a cheaper price point, but just be heavy sports and not come with all the news channels and stuff like that, like a lot of people don't like, right, and don't really care about. So I think it's pretty realistic for them to potentially hit 10 million plus subscribers in the next 2 to 3 years, right? They're talking about they're already going to be cash flow positive immediately, never mind how this cash flow builds out over the next few years. They're going to have cash coming out of their ears because of the whole $220 million payment and all that, right? And they already had a pretty good cash balance as it was, right? Plus, Disney is going to provide them with a loan in case they needed to tap that, $145 million there. Holy smokes, this is no dang jokers. So they got cash coming out of their ears. Now, additionally, they're going to have, obviously, an insanely super close connection with Disney and the incredible amount of content that Disney owns, right? And this is going to be an entity that's majority Disney owned, right? Because, obviously, Fubo owns 30% of it, and then Disney's going to own 70%. So it's very in Disney's favor for this to be successful over time, right? And so the question is, how do you value a company like this? And so I'll say this. My opinion is the total entity, right, should likely end up being valued, I would say, somewhere between $5 billion at the low end, $5 billion, and potentially all the way up to $25 billion on the high end, okay, with this sort of entity we're now looking at here. So that's significantly higher than where we're at right now. The market cap, even after today's blast off to the moon, is under $2 billion market cap on this one. And I believe the minimum kind of barrier that we should be thinking about valuation of this entity is around $5 billion, okay? So, there's certainly a lot of room here, and I think we could go all the way up to potentially $25 billion. But this is going to be very hard to value in the short term, which is going to make the stock very volatile. But the moral of the story is, Fubo's valuation has a lot of room for the upside over the next 12 months, like a lot of room for upside, right?